But over here, Thomas, this is order flow. This pretty much
All
just
right.
shows us exactly, like if I zoom in a little bit
Ooh,
here,
this
you can
is
see,
cool.
bro, it's so sick. So on the left side, within each candle, it's still right. So like a candlestick chart, depending on how
What
you.
program is this?
This one, I'm not endorsing it or promoting it, but this one is called ExoCharts. And then you need to plug in the data feed, which I use DexFeed. DexFeed is very popular. I think a lot of major platforms use DexFeed, but you got to plug the feed into the software to be able to get some data. But it's pretty dope. So over here on the left side is the bid. Obviously, the right side is ask, blah. But the main thing,
And then it's also showing volume.
say it again.
Is that also showing volume?
Yeah. So here, if I change this candlestick type, it'll show it a little clear. Yeah, it also is showing like the volume where most of the volume is being executed at within that candle as well. So that's pretty cool. It gives you a nice like little visual. And then
Very cool.
Yeah. So down here, there's this row down here that says delta. And it's a little bit different from, it's just a little bit different from the delta whenever we refer to like the options contracts. This one just refers to the people using market orders. So another term for market orders would be aggressive buyers or aggressive sellers. But pretty much what the delta is telling us is the difference between buyers and sellers within that individual candle. So what the delta will say. So, I mean, for example, let me change this candlestick type back. So you can see we have a green candle right here, and I'm on the 5-minute chart right now, but this green candle has 528 delta. So this green candle is corresponding down here with the footprint, and it's showing that there was a positive 528 delta. So that's just letting me know there was 528 more aggressive buyers, aka people that are using market orders, buying within that 5-minute candle than there was sellers. So yeah, there was buyers and sellers.
There are 528 more buyers.
More buyers, correct. So there's buyers and sellers there, but there were that many more buyers, and that's what gives us the delta for that specific candlestick. So
interesting. And the delta here is the amount of the net of whatever amount of buyers.
Yeah, and then vice versa. So like over here, we have a negative 363 delta. That just lets us know there was 363 more aggressive sellers than buyers within that specific candlestick. So it just gives you a little bit of insight. So some things that are actually really cool. So right now I'm actually on an hourly chart. So I like to use the hourly and the 5-minute, but sometimes the hourly will give you a better picture. What's really interesting here, this morning, like if I go over here, this is kind of showing some of the executions that I took, but I want to kind of, if I could zoom back out, I don't want to show you what I was looking at on the order flow to even have a long bias. But the first thing that I was looking at was number one. This is when I can already tell something's fishy, something's odd, something is strange, because typically, depending on the color of the candlestick, typically whenever there's a green candlestick, typically most of the time, 9 times out of 10, the corresponding delta for that candlestick is typically going to be the same color. So typically if we have a green candlestick, typically we'll have positive delta. If we have a red candlestick, typically we will have negative delta. It kind of just makes sense. Yeah. But over here, and this has happened quite a bit since volatility has increased. It's happened a little bit more often now that volatility has increased, but Errol been in the order books whole. So what's really interesting, this is just something odd. For example, right here from 8 to 9 on this hourly, we have a negative 416 delta. Negative 416 delta with a massive green candle. Let's like,
I mean, there must be some, my guess.
Yes, go ahead.
You tell me. My guess is we had singular buyer, big volume.
I mean, yes, specific buyer would be like limit orders, aka resting orders, whatever. Like
execute once it hits a certain point.
Yeah, and typically the bigger money in the market, like banks, they're not using market orders. They're not in here day trading. They're not in here using market orders. They're using limit orders. They're using resting orders. So typically those limit orders and resting orders is typically going to be from bigger money. Hence why they have the power to actually move the market. So typically retail traders are using market orders and just getting in, getting out, a little bit more emotional. I like to just look at the market in terms of where's liquidity at and how are aggressive buyers and sellers interacting with passive buyers and sellers. And then again, another term for the limit orders, resting orders would be passive buyers and sellers, because it's a little bit more passive, if that makes sense. Yeah. But anyways, so this is from 8 to 9 this morning. And then one thing I like to look at is something called the initial balance. in the day. So pretty much that will be this area in the market where most of the trading activity occurred within the first 30 minutes to 60 minutes. Some people have different definitions for an initial balance. I like to use the first 30 minutes. Some people like to use the first hour, but that's something I pay attention to. And then anyways, so we had sold off this morning outside of that initial balance. We get a lot of, it's kind of like a short trap that played out this morning. And over here, I was actually short this morning. So I was short. And then once we made that low, once I was looking at some things were kind of suspicious, I just covered my position for like maybe a few dollar gain. And then I flipped long. So then I entered here, added. And then I think I added up to about 10 micro contracts. But anyway, so added, sold. And then I like to just sell at the highs. So sometimes I'll just scale out of the position. But again, I mainly got that bias from this morning, understanding there was a lot of liquidity sitting above this area and price is attracted to liquidity. So once I recognized shorts were kind of trapped in the morning, I had a little bit of an understanding why I personally had a bullish bias. And then so whenever I like find my bias for the day, that's when I'll then find picking out the good risk reward opportunities. But I find it easier to trade if you can formulate a bias with evidence to support that claim, rather than like, I feel like I'm bullish today, or I feel like whatever the case is. But another thing that kind of gave me that bullish bias was, again, what I was showing you over here on the bullish chart, or on this hourly chart, is the fact that we had a ton of sellers slamming short, but we had an upside move in the market. So that's just something that tells me to kind of pay attention a little bit more. It goes up and goes down, and you're correct one way. It's all feelings. No, I hear you. But it's just nice to see how other traders and other market participants are kind of positioning themselves in the market. But what's really interesting though, especially over the last couple weeks, is whenever there is those signs of absorption, like passive buyers absorbing those aggressive sellers to the downside, just like right here again, for example, it's so interesting seeing how some of the better moves come when retail traders are most of them are on the wrong side of the market. And it's kind of just crazy to visually see that happen over and over again. Most of retail is on the wrong side, which is usually the aggressive orders. The opposite tends to happen. So it's just very interesting to observe in real time too. But
no, just interesting that you mentioned that the retail sort of goes, if you have aggression from retail, the opposite tends to happen. And I wonder to why that fully is. And Brandon says it's all psychological and psychology and feelings. 100%. I'm not saying I don't use charts, just they're the past and hindsight. Yep. Yeah, I mean, I look at, I don't really, actively trade too much. I guess though, I don't know, Brandon, I guess like I've never been a big TA guy at all. So I agree with you. I guess you can make an argument that actually because of the psychology, maybe, and us humans are repetitive beings, that the past can help you gauge the future. But I by no means am arguing for TA.
That's kind of all I got for today. We can go ahead